Morning, Market Chameleons. Happy Monday. How you doing, Dima?
Good morning, Will. How are you?
Great. How was the weekend? Everything good?
Yeah, it was pretty good. Actually, I got to relax this weekend. Just took it easy. How about you?
Relaxation is good. 3 days. It's interesting not having a Friday, but
Yeah.
it was good. Great to spend time with the family and good to get back Monday morning, everyone. Before we get started, you want to get going right under the disclaimer, D? What do you think?
Yep. Good morning, everyone. Thank you for joining us. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, contact your broker. That's what they're there for, to help answer your questions, provide you with guidance. There's the disclaimer, everyone.
Excellent. We seen any movement besides Alibaba this morning?
Yeah, let's take a look here. And yeah, I think we'll start with the pre-market report. See, from there, we'll go see which industries were doing well on Thursday, right? Thursday was the last time
Yep.
we were open, right? Take a look what industries were doing well on Thursday. We'll take a look at the implied volatility movers that we stopped at on Thursday as well. And, if there are any questions along the way, let me know. I'm going to try to answer as many questions as we can get to today. And tonight we'll have a webinar. We're going to take a look at stock order flow, and we'll just discuss the different types of stock order flow there are, because a lot of people, they don't realize if you take a look at the stock tape, there's a lot of stuff going on there, lots of different information, and we're going to talk a little bit about that. So, we'll talk about dark pools, intermarket sweep orders, market on close orders, and so on. So that will be tonight at 6.
Yeah. And I will put that link to tonight's webinar at 6 p.m. right now in the chat, so everyone has that.
Okay.
Cool.
With that, let's start with the pre-market movers. These are stocks that are actively trading in the pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. I'm going to filter really quickly, and let's look at stocks with a market cap of $20 billion or higher, see what's going on with those stocks. So here we have just the one that sticks out just because of Thursday was down a lot, Alibaba, and what's going on with that stock, Will?
Well, it's actually the Chinese government is exploring the fact that it may be a monopoly, and I have no idea what that means. What the system is in China for breaking up a company that they think's a monopoly.
Right.
We have a few experiences here in this country. I can only imagine it's going to be messy in China.
Yeah, and we have that discussion here, right, with Google, Facebook, Amazon. So we'll see if that, what happens to Alibaba. We'll see, how that affects the stock. But we definitely, you hear that heating up here with Facebook, Amazon. I'm hearing that they want to break up Google. They've been talking about that for a long time. Even Microsoft, they haven't done anything, but if they move forward with that, it'll be interesting to see.
Yeah, well, I'd have to go back, but I remember with AT&T when they broke it up into, this was, economic history lessons, right? All the shareholders got a piece of all the new companies, right? Is how it works.
Right.
And so it turns out over the long that it was actually a pretty good deal for shareholders. That being said, in China, I have no idea how it would work out.
Yeah. Yeah, I'd be interested to see if they break it up and how that pans out. I mean, certainly you can make the case, for Facebook and Amazon and Google's that, they have, we move before. The most valuable thing would be to hold land, right? Used to be, whoever owns the most land, the most real estate, it owns wealth. Now it's information, right? And they have a wealth of so much information on people, it's becoming a little bit even scary. Like the other day, my wife, we were looking, she just mentioned a chandelier, like, oh, I saw a nice chandelier for the
Let me guess.
Yeah,
On her phone, next time she looked, there was an ad for a chandelier.
it was like immediately. Like she looked 5 minutes, and then all of a sudden there are all these. So they're listening in. They know your history, and that information is there, and it's very valuable. And every day that grows. So I don't know what. Obviously, on top of just an earnings multiple, that information itself is very valuable, right? They're sitting on a wealth of, it's like real estate, a bunch of land there, and it's definitely taken notice in Congress, right? They're talking about it. They're talking about it in the Senate. So we'll see. So far, nothing happened. But if they
Well,
break,
and also the this information is why we get the prices we get when we're using the apps, using the technology, right? It's
right,
for
works
them
changing,
having our information, we get this great experience at almost no cost.
right? Well, the cost is you that information you give up, right? Some
Yes,
of those
exactly.
that for you. Um. Anyway, that I'm not gonna. I don't see anything else that pops out at me right now. We see a couple things moving like 5% forward, but on low volume. This MGA trading 15,000 uh, shares in a pre-market. I see AZN up 4.1%, 633,000 shares, or some news there. Let you get to it, let you look at that, interpret it. Let's take a look at the unfiltered report real quick. And I see we got some low cap stocks moving up 128%, ACY, 4.2 million market cap, GRNQ, $75 million market cap, up 124%. It looks like there is some news out there on these stocks. Again, these are low cap stocks. We usually see them, popping in the morning. If there are no questions, actually, I'm going to move on just to get to more stuff, to cover more stuff. So if you don't have any questions on the pre-market,
Nothing about the pre-market other than Goat from Texas is asking about VRTX. It got an approval, I guess, out of Canada. He's wondering if there was, I'm wondering if there's anything showing up in our trade ideas, best option strategies. I know the information's from Thursday's close, but I'm just wondering.
Is this VRTX?
Yeah.
Here? Okay. I mean, I don't see doing much in the pre-market, up a little bit, 0.2%. Is that news? Is that today's news?
That's just what Goat's saying. He said there was an approval in Canada.
Okay. Well, let's just take a look. Let's take a look at, like, here's some trade ideas that popped up. So here's one over here, buying in the Jan 22 expiration, the 257.5 call, $2.50. We think it's worth theoretically $6.08. That's a 143% theoretical edge with a probability of profit 32%. Long straddle. So that's if you're just looking at volatility in either direction, that it will make a big move from, away from this price. So that's looking at the December 31st, which is expiring this week, December 31st expiration, 235 straddle, $6.25. We think theoretically it's worth $7.23. That's a 15.7% theoretical edge with a probability of profit 41%. Another long call, it's looking, this one's also this is a seasonality play, looking at the Jan 8th, 232.5 call, $7. We think theoretically it's worth $7.52. That's a 7.4% theoretical edge with a probability of profit, historical probability of profit, 33%. So those are like the top three by edge. Of course, you could just go in there if you're looking for like a bull put spread. Nothing showed up with that.
Well, that's more than helpful. Thanks, D.
Yep. Okay. But yeah, VRT. I didn't see the news, but I do. I mean, I didn't read the news, but I do see that they had some news here. So let me see if the press releases. Yeah. So looks like today they issued a press release over here. So I'll let you guys go read it and interpret that. let's move on to, let's see which sectors we're moving on Thursday. So I'm going to go performance by industry. So let's take a look at the industries. I'm going to sort here. So these are the industry names over here. This is how many we have in that industry, the percentage of them, the stocks in that industry that were up, percentage that were down. This is the median return on Thursday. So I'm going to just sort by the highest median return. So this one, shipping ports, only has 2 stocks. Here's one, residential construction has 22 stocks in there. All of them were up on Thursday. Median gain 2.1%. Let me just move that up. Let me just see which stocks. When you open this up, you see like Beazer Homes, probably like Lennar, Toll Brothers. So these are like home builders. Here's Toll Brothers. So you see, at least on Thursday, all of them were up. I guess like this stimulus, low interest rates is helping that industry, right?
Yeah, there was a piece in the Journal this weekend that I guess the biggest problem with the home builders right now is actually finding available land to develop. There's so much demand for homes. It's hard to get that next plot through where you're going to put up another development is really tight. So
yeah. I think that the real estate market is starting to get tight there. And we're actually discussing that today. We just had another stimulus, almost $1 trillion, $900 billion. So again, we're just printing money at this point, and we see that those inflation expectations ticking up, especially like we seen what Bitcoin's doing, right? What's Bitcoin, like 27,000 now?
Yeah, it's up there. It's I mean, there's a certain segment of the population, probably most of the people watching, our YouTube live right now, that have a concern over, how much money is actually being created by the government, and what that actually means long term, and how it affects, your portfolio, your investments, your life. I mean, it's things can get out of control. I mean, if they're not already. I mean, listen, I remember going into New York, and you've probably seen this, and it was, I think, above a jewelry store right near Madison Square Garden. Someone had paid for a clock that was the constant running of the national debt. I don't even know if it has enough zeros anymore, that clock. I mean, that was when I was a child. Some concerned citizen had put this clock on top of a low level, like a 3-story, storefront it was like a triplex or something, right down from the garden. And, people have been worried about it forever, and it hasn't come home to roost, but one day it may, and it will be very, ugly when it does.
It's like, well, how many, if we stay locked down, how many stimulus packages because these stimulus packages are printing money, but if you don't have any productivity, the thing is that if you have inflation expectations, when people think that money's getting devalued, it's very hard to tame, right? Even if you're raising interest rates, because you lose faith in it. And it's happened before, right? Entire governments have failed due to that. So it's a little bit worrisome for sure. Anyway, let's take a look what else has been up. Insurance brokers, those were up. 87% of those stocks were up. Median gain 1.3%. Let me see, some REITs, silver, that was up, 7 at 100% of those were up for almost 1% gain. So these are some of I've read some semiconductors. People are talking about like the semiconductors are going to start coming back. But 72% of those were up on Thursday for almost 0.75% median gain. Let me see. This is interesting though, that the residential construction, they have a 10 PE, but their margins are not bad. 20% gross margins. Look at their growth. 14% revenue growth on average last 5 years. Annual average growth in net income 23%. So that's interesting. I think they're always like that at low P's, but still 20% margins and pretty decent growth rate.
Yeah, for those who are not on the chat, our friend Jake, the doctor, is saying you got to be short the dollar and long everything else. That's his opinion.
That's what it seems like going here. Let me take a look at I think I have it on here. Let me show you in the S&P 500. Let me see if we have it on this one. So I'm still working, before we push it out, but we're looking at the fundamentals, the holdings in the S&P 500. May have done this last week, but I'll show you here. So this is right now, if we took all the earnings of all the, the S&P 500, we took the whole and the market cap, took that ratio. Right now we're at 35 PE. That compares to 3-year average 25 and 5-year average 25. So you see how the multiple just expanded. Price to sales 2.78. That's worth versus a 3-year average 2.4, 5-year average 2.3. So you see that those multiples keep expanding. But if we just take a look at the earnings, net earnings last year in that S&P 500 down 26%. Net income down 1% in the 3-year average. Gross margins down almost 5% from a year ago. Total revenue down 2.1% from a year ago. So if we're taking, if you're taking the S&P 500, not just like the top ones, you're looking at, contracting gross margins, net income's going down, total revenue's going down, multiples are increasing, market caps are increasing. This all like just anticipation, money's being thrown out, stimulus. But I'll give you, I don't think I could see it on this one. I'm just gonna take a look to my left as I'm testing it on different computers, but I'll just tell you this as a percentage of total revenue. As a percentage of total revenue in the S&P 500, Walmart is 4.5% of the total revenue. Amazon is 2.9%. Berkshire Hathaway 2.3%. Apple 2.3%. CES 2.2%. So if you're looking at like the top 10 stocks, in the S&P 500, they're like, I don't know, almost 20% of all the revenue. And if you take a look at just the net income being generated, I'll let you know right here, Apple, 6% of all net income in this S&P 500 is generated by Apple. Microsoft's 5%, Berkshire Hathaway 3.8, Google 3.8. So it's really being dominated by the top stocks in the S&P 500. A lot of the stocks in the S&P 500 don't make money. So it's just, but this, S&P 500 keeps growing. So it's just something to really, consider when you're looking at this. Let's move on to, if there's no questions on this, Will, if you don't have any questions.
Yep.
Okay. I'm going to take a look at, let's look at the implied volatility movers. So these are looking at the money implied volatilities for the stocks in different expirations. I'm going to filter out by the next monthly expiration. Let's go January 15th expiration. I'm going to go and then I'm going to just use this to sort by market cap. And let's just take a look what the implied volatility did on Thursday, what the straddle is implying, the stock to move in either direction versus historical average moves. So we see Apple here at the top of the list, closed at around 132. It was up 0.8%. This is its market cap, 2.2 trillion. January 15th expiration, 15 trading days to go. The implied volatility ticked up on Thursday, 3.2%. 205,000 contracts traded on this expiration. So we see the straddle is implying a move in either direction, 6.7%. So buying the call, buying the put, that's the straddle is implying to move 6.7% in either direction. In the last 6 years, on average, Apple moved 6.1% over a 15-day trading period. So if we take that ratio, 6.7 divided by 6.1, implied versus historical average, we're at 1.1 over historical average. The high move in Apple over 15-day period in the last 6 years, 20.6%. Take a look at Microsoft, same January 15th expiration. See Microsoft was up 0.8% on Thursday. Implied volatility decreased in Microsoft, traded 24,000 contracts on January 15th expiration. Straddles implying a move of 4.8% either direction. That compares to a historical average move of 4.5% over a 15-day period in Microsoft. So if we take that ratio, implied divided by the historical average, get 1.1. High move on Microsoft over a 15-day period in the last 6 years, 16%. Amazon, also that was down 0.4% on Thursday. The implied volatility ticked up a little bit, 0.3%. 16,000 contracts traded in January 15th expiration. The straddle is implying a 5.7% move in either direction. That compares to a historical average move of 5.8%. That's the realized average, 5.8% over a 15-day period. So that's, if we take that ratio, it's almost 1 to 1. High move in Amazon over 15-day period in the last 6 years, 24.6%. Google, here's one. They have GOG, GOGL, there's two of them. Let's take a look. January 15th, 15 trading days to go. Implied volatility down 6% on Thursday. Implied straddles 4.8%. That compares to a average move historically of 5.3% over a 15-day period. So if we take that ratio, 4.8 divided by 5.3, we get 0.9. It's a little bit below a 1-to-1 ratio. So that's below its historical average. High move over a 15-day period in Google, 19.6% in the last 6 years. Facebook was down 0.3% on Thursday. So same expiration. We're looking at the money was down 1%. Implied volatility was down 1%. The at the money straddles implying 6.5% move compared to a historical average move of 6.2%. So that's a little bit above 1 ratio implied volatility over the historical average. Here's Tesla. That was up 2.4% on a Thursday. The implied volatility ticked down 1.1%. The straddles implying a move of 11.2% in either direction. That compares to historical average move of 14.2% in the last 6 years. So we see there that ratio is 0.8. The high move in Tesla over a 15-day period, 54.7% in the last 6 years. Here's Alibaba. That was down 13% on Thursday. Implied volatility, skyrocketed there, up 64%. The straddles implying a move of 10.3% in either direction. That compares to an historical average move of 6.1%. Again, there's news on it, right? So you got to take that into consideration. And that ratio, implied move versus historical average, 1.7%. The high move in Alibaba in the last 6 years over a 15-day period, 19.5%. So do you have any questions? I could keep.
We've got a couple questions. First, Chuck may have joined us a little late. He's asking, hey, and Chuck, thanks for joining the chat. He's asking how you actually got to this screen from, I guess, if you landed on the main landing page, how do you get to the screener?
It's under options over here, and we actually moved it here. So it's under implied vol movers. So if you go to options, go to the right, and it's the first one up here, implied vol movers.
Now, and we also had a question from Raj, who's a very active chameleon. And thanks, Raj, for joining us on the chat. He asks, Dima, when is the IV seasonality being released? Is that something you're working on in private? I haven't even heard about that.
I am still working on it. Let me just take a look, and I'm trying to organize it in a way that will make it easier to consume, because as I test it, it's kind of, it makes sense to me, but if we push it out, it probably won't make sense until we fix it up. But here's what the seasonality looks like in SPY. So what this is doing is, here, I'm going to show you. This is a seasonality chart. So this isn't for the last year, but this is the average implied volatility day to day from 2004 to 2020, basically. And it shows you how the implied volatility moved during the calendar year. So you could see here, and this one got pulled up really because of last March. So you see it, like, it went way up in March, then it kind of comes down here, but you could just take a look at the median implied vol. So instead of the averages, which could get pulled in either direction, we could take a look at the median implied vol. Right now, we're right here in December, which is the median implied volatility in December is 13. So you could see where, how by year it did. So median implied vol 13, December, we see that in January, it does tend to dip. So we see the, down median volatility 11.8. February comes back up to 13 median. So it takes a dip, kind of sits there. So you could see here in January, kind of sits below that long-term average, starts coming back up in February. Then March, April, again, starts coming back down, firms up in May. June, it pops, and then it looks like during the summer months, it comes back in. So this is what the SPY seasonality implied volatility looks like. We have a bunch of these tables, so I'm trying to create insights, because if I push this out, you see there's lots of numbers here. So that's why I'm trying to make it so you when I push it out, you guys will be able to understand it. So I'm just working on adding insights into these tables. But basically here, how you would do it is in December, we break it down from where the implied volatility started historically. So that would be like, the last day of November. That's where it started. This is where it ended. But last day of December, this is the high and the low for that year. So this way you could just kind of get a, where the average start was, where the average end value was in December, and on average, the high and the low. Does that make sense to people?
Yeah, well, Raj loved this. And I know Jake and Raj spend a lot of time in their chat together, and they're asking, is this great information going to be available with every ticker?
Yeah, so it'll be available with every stock. The thing is, with some stocks, the seasonality is because of earnings. You're going to see it going up and come back down drastically. So you're going to see here. Let's just take I'll take a look at Apple. So here's Apple's. So you can see here, like, it'll pop during earnings, so, and then come back down drastically. So that's how it would look, for the tickers. But yeah, it'll be available for all the tickers that have options and that have a history, going back. If it's newly listed, obviously we'll have a more limited history. But that's how it would look like in Apple. Again, you see this table, then I got another table here. This one compares the implied volatility to the realized volatility. So in this table, we say, well, what was the volatility implied by the options, and what did the actual stock volatility do? And then you'll be able to compare historically where the implied volatility tended to be overestimated the most, which months, or which months it was underestimated the most relative to the actual volatility in the stock. Is that, hopefully that makes
Super
sense.
helpful, and everyone's saying thank you. Great stuff.
Awesome.
We've only got about a minute left. Brad Moore, who joins consistently, is a very active chameleon, is asking. I know he was nice enough to share that I think it was a TD trading account he uses to trade American equities and ETFs, but he's from Canada. He's wondering, is there any chance we ever have Canadian stocks and options?
I mean, there are Canadian stocks listed in the U.S., that those we would cover, but Canada itself, we don't have any plans right now because we have lots of other data coming in, just in the U.S. alone. So we don't have any plans right now. And one of the things is once all these different exchanges have their own data feeds, it's very hard to consume like these data because you need a completely different program. It's different coding. They have different, different rules.
We would need to have the Chameleon SPAC come out to finance global growth. I mean, I'm seeing what you and the developers are developing here, and I'm like, how is this? I mean, there's so much information being made available in the U.S. markets.
And we get a lot of requests like that for foreign, like a lot in Canada, Europe, we do. But again, it's not like a plug and play. You have to like sit there and read.
Yeah, we're a minute into the trading day, Dima. Sorry about that. Thanks for joining us, everyone. Great job as always, D. Remember, everyone, we have a show tonight, 6 p.m. What are we looking at again tonight, D?
So we're going to look at stock order flow, and we're just going to take a look at the different types at the tape, what is printed on the tape and what it means, so like dark pool trades, intermarket sweeps, odd lots, round lots, large blocks. We'll just discuss all that, because usually people just look in aggregate volume and price, but there's lots of stuff going on that tape and information that we'll just look deeper into.
All right. That's tonight's show. We'll dissecting the stock order flow, dissecting the tape. Thanks, D. Have a great day, everyone.
Great. Thanks, everyone. Have a great day. Hope to see you tonight or